We are recording. All right, welcome everybody to this week's Yummy Market Review. My name is Bennett McDowell and today is October 4th, 2023. All right, so let's see for announcements. Gene, you got any?
Announcements are just happy October, and of course, as always, we love when you all join us for the YouTube Stock Analysis Fridays. That's every Friday on YouTube at 8 a.m. Pacific Time.
Right. Good point.
Back to you, Ben.
Also, to EBS today. No, that's not some disease. That's where they're going to test the phone system, I guess. So I think that happens a couple hours from now. All right, so that's the other thing happening today. And the market has been selling off, so we're going to take a look at that and see how that's progressing along with our forecast. All right, so let me go through the administrational items here. Let's get those babies out of the way. And first thing I have to go over are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to be aware that there are risks in trading. We deal in a realm of probabilities. Search for your edge and then exploit it, but at the same time realize your edge won't work all the time. So that's what probabilities are all about. You want to obviously be on the more probable side of the probability matrix than the not so probable side, but it means just that. It means we can't guarantee any trade is going to be successful until after the fact, right? Then we'll know if it's successful or not. But the idea is that you're looking for certain patterns or things in the market you search for and look for that usually, more often than not, lead to a profitable ending. All right, so that's kind of what that's all about. Past performance, of course, cannot guarantee future performance. Things do change in the market, and every day is a little different. And of course, we're going to be looking at probably stocks you want me to take a look at. And remember that I'm not your financial advisor, but you should have one. And if you do, check with them to make sure that any trades we actually like here or suggest are suitable for you, because they may or may not be, depending on your personal situation, which we don't know, but they do, of course. And then finally, trade with money you can afford to risk and know how to do risk control on each and every trade. And we can help you with that. I've got a whole array of books here on money management. My newest book, The Art of Trading, published by Wiley, should be coming out, I would say, pretty soon. Okay, we're putting the final touches on that. I've written a little bit more than I thought I was on that. I've got a lot of really good new information in there, along with information on using the newer software since our first edition came out in 2008. All right, let's jump in here and take a look at today's economic announcements. So these are the economic announcements, not the technical stuff. And we have NBA mortgage apps. Apps are pretty much at an all-time low at this point. Interest rates, of course, have affected that. And people that already have a lower rate mortgage obviously aren't going to refinance at this point. So and new home sales are pretty bleak at this point. So nobody's really doing much with mortgages as they did, of course, a year ago. ADP employment report today, and that's 8:15 Eastern time, so that's already out. PMI, factory orders, ISM, EIA petroleum status, no FOMC. Probably going to get a 25 basis point rate hike, I think, in November. I think that's going to be the next one. Thursday, international trade and goods services, jobless claims, EIA natural gas report, Fed balance sheet, and then we end the week with the employment situation, consumer credit, and the good old weekly Baker Hughes rig count for those of you that look at that. All right, when we look at charts, you people are pretty much family by now, but this is the software we use, so I don't think I need to go over that. If you're watching the recording on YouTube or something, remember that we use our specific tools when we actually look at markets and decide if we want to enter and exit the markets. These are the tools we use. We have charting software, scanners, and risk control software. All right, so here's my latest chart on the Dow Jones Industrial Average dated October 1st, which was Sunday. And these are all given to you on Sunday, so you can download these then and get ready for the week. So the previous week, we broke this support level here, okay? So that was broken. All right, so we're keeping an eye on this one. We haven't quite gone down quite that far yet. It's gotten, below, I think 32 for a little bit, but it's not gone below 31,429.82. So, and my feeling on the market here, all right, is let's see if we take that out. But, we've had a sell-off, so we've come down something like that. But we need to take that support out. But really what's important here is after you get a big sell-off like that, you usually get some type of relief rally. And that's what's really going to be important. So if we get a pull up in the markets, does this high hold or does it go past this? Does it go to the inflection point and sell off? To me, that's what's really important and what we need to kind of keep an eye on. Not so much right now where it's selling off because this has been a straight dive down, but I want to see what's going to happen when we have the relief rally. I want to see how much steam that has or does not have, where it ends, and then if we turn around and take out whatever low that this sell-off creates, because we may be there now or close to it, or it may go down another couple days, but whatever low gets put in, I want to see if that gets broken after, keyword is after the relief rally, because that to me is going to be more telling right now than what's going on, because is this just a temporary sell-off right now, and the market will recover, or is this the beginning of something more bigger like E-wave, which we're kind of thinking that we're hoping at least that comes along, and so we'll see, but it has to go past that 31,429.82 level. And then it has to go down and take out the bottom of what was the old C wave over here, and that's 28,660.94. Takes that out, then look out below. Now, if you want to start shorting the market, putting your stop above the top of D wave, anticipating this is a move, that's fine. You can do that. All right. It's early. Okay. Market's still pretty high. It's going to be a little bit more risky than if we take out the 31,429 point. But yeah, I get it, okay? If you believe as strongly as I do that the market will sell off pretty soon, if not already in the beginning of it, then that would be probably a move I would recommend, okay? So we'll see. But anyway, that's kind of the levels we're watching, and I like to give my subscribers those because those are important levels. Now, the other thing we do also is give you a 60-minute chart, which you can download as well. And we classify short and support and resistance levels so you can keep an eye on what's happening. And obviously with the red PTF going into the week, we anticipated some more selling. But I think probably we're due perhaps for a relief rally at some point, maybe by the end of the week. All right, so this is my new chart for the long-term weekly chart, okay? And I've kind of zoomed in a little bit, but if you look to the left of the chart and go all the way back into the early 2000s, this has been a fairly steep bull rally we've been in, except for COVID. It has been pretty much to the upside. So we think in 2022, we put in a significant top on the daily chart, which was wave 5, and that represented wave 3 on the weekly chart. And then we went into an A, B, C, D configuration. Notice D does not have a box around it yet. And the purpose of that is we're not 100% sure that D is over. We have to break some of those more support levels on that weekly chart before we're confident to draw a box around D wave. So we'll see what happens with that. The target that I'm put on for this correction is a fib retracement target based on the bull run that lasted 13 years. And that comes down to 38.2 to 61.8%, which is in terms of Dow Jones numbers is 23,273 down to 15,014. COVID low was at 18,213.60. The PTF down here, which is red at this point, is indicating with a 75% accuracy rate normally that the market on the next major correction will take that low out. So E-wave should go just below that, and that would put it in the lower part of the fib target zone. So my target zone for this sell-off is 18,213.60 down to 15,014. That's the low of the target zone. When? Sometime I think in 2024. Depends on how fast this correction moves. And if it meanders a little bit longer, then of course that delays the time getting down there. Suggestions on what I would do, okay? You may want to diversify, you may want to hedge your portfolio, you can talk to your financial advisor about how to do that. There are many ways you can do that. If you need help in that, that's why we have the Oracle Inner Circle. I go over those type of hedges that I think would be best. And some type of defense for you as well as an offense to take advantage of the market sell-off. All right, so there's many things you can do. But that's my basically where I think the markets are going, and it's all going to depend on how fast we start breaking those support levels. So we will see. All right, this is a complex correction on the weekly chart. So complex corrections make it much harder to know exactly the timing of when things will reach there. So let's just see how much steam E-wave has, because E-wave basically will replace normally what C-wave is on an ABC zigzag normal Elliott wave correction. Any questions on this? Any questions on this? Okay. A little bit on the housing. I showed you this chart last week. I'm going to show it to you again because it's still pertinent. This is a chart showing the Case-Shiller Housing Index. Unfortunately, this chart has a really hard to see line right here. I'm going to trace it here, but I got to fix that. And I can barely read it here. So it goes something like this, and then goes down like this. So, okay, so that's the CPI. CPI is a consumer price index, usually measures inflation, all right? Case-Shiller Housing Index measures the average housing across the country, so to speak. So that shows you that housing is unproportionately, unbelievably high compared to the CPI, all right? So normally with housing, you expect it to keep up with inflation, but notice what's happened here. Okay, there's a lot of supply and demand issues that come into effect as well. But also too, in a normal market, these lines are fairly close together. In bubbles, they get spread apart. So this here represents quite a spread. So this is why I am bearish on the housing market. It's kind of like, during a wave 3, you get a big bubble and then it returns back to more closely to the average trend line, so to speak, of the trend during a wave 4 correction, okay? And things settle down from there. So that kind of situation, I think, is ripe for a big housing correction, and I think you got to have at least a 40% correction for those lines to get closer together. Any thoughts on this, on the housing situation? Any thoughts on that? I would imagine, real estate's kind of difficult because it's very local. Depends. There may be some pockets that do better than others, obviously. The old thing, location, location, location. But overall, generally speaking, this is representing the average housing index across the country. So definitely very far away from the CPI. Okay, so there you have it. I hope so, James. I think so. That was the idea. That was certainly the idea. All right, Frank, you better put your order in now, okay? You're not the only one that said that to me. It's pretty funny. Just so you know, it is beautiful out here. We got a really nice pad out here, beautiful view of the mountains out here. And things are quite a bit cheaper out here. There's some things that are not. The fuel prices, for those of you that don't know, we used to live in San Diego, so we moved from San Diego to Tucson recently. And I did that for a variety of reasons. One is that the tax base was getting really high for us. And the other reason was that we had so much equity in our home because we've lived there for about 7 years, that based on this bubble spread, I wanted to take the equity out of that house and move it over to something with more value. So that's why we came out here. And I think it hopefully will prove to be a good move. And if it doesn't, it still doesn't matter because we're in a good situation no matter what. But in any case, things are cheaper out here. Some things are not, okay? Food, the restaurant prices are not as cheap, okay, as I thought they would be. Gasoline is much cheaper, especially now, all right? I think I had a friend of mine in San Diego told me they're paying over $7, I think. And it's much cheaper here, half probably, not quite, maybe a little bit more than half, but not much. And sales tax is about the same, okay? But the income tax is much, much lower, okay? The state income tax. So all things good. Property taxes are very low here, okay? Housing, much lower here. So I think there's good value here. So, you know, all good, all good. Fuel, okay, energy. Just got our first electric bill, unbelievable, half of what it was in California. And normally, maybe even a little more, a little less than half. And water is about a third as much. And that's kind of interesting considering all the water problems you hear in Arizona, but it's about a third. So overall, good move to make, I think. So if you're thinking about doing that, not so bad. So anyway, but hurry, because I think the market's deteriorating quickly, that kind of thing. All right, let me come out of here and we'll load the charts here. Let me just see if there's any comments here on anything. All right, Frank's saying he had a friend in Phoenix. He sold his real estate holdings about 3 years ago and the values have more than doubled since. Yeah, his timing could have been a little bit better, but you know, I'm sure he did A-okay depending on how long he had those for. They say if the Airbnb housing hits the market, then that'll increase the supply. So we'll see what happens with that. And if that happens, then prices could come down again. So the thing is that I think may happen, and I'm just gonna, this is my opinion, okay? This is not anything, but based on the Case-Shiller Index, which I just showed you, we're in a bubble, right? Based on interest rates going up, and based on the fact that the economy, you know, is kind of recessionary right now. There's small businesses going out. There's a lot of issues, right, going on. If you have a further deterioration of the economic situation, people will start losing jobs and they will be forced to sell their home. Right now, I don't know if too many people are forced to sell their home. So when you get to that point where they're forced to sell their home, then they're going to get desperate. They're going to flood the market, and it could be quite a few people if the economy gets bad, or they lose jobs or whatever. That will cause prices to correct in itself. Also, too, you got high credit card debt, all right, that's causing problems with people, which create a difficult situation for many because of the fact that that's another huge expense that they weren't counting on a few years ago, right? So you get all that combined, and it puts people under the vice grip, so to speak, and they get squeezed, and so they may want to start selling their home to get that equity as much as they can to pay off those debts and things like that. So I see it on the horizon. Okay, we never can time it perfectly, but I do see that as a beginning of a real estate problem. And I don't think, you know, I know there's a little bit of a beginning of it now, but I think it's just the infancy. All right, Frank says credit card debt just hit a new high. Yes, it did. Okay. So the thing is, you know, when you get a situation like this, it's not all bad, okay? Because there is opportunity in every cycle of the market. You know, one of the advantages we have over having a regular storefront is that we can short the market, right? Storefronts can't do that, all right? They have to weather it out. So that is something as traders we have in our back pocket always as a relief valve to take advantage of a bad cycle in the market. So you can do that. The other thing is once the market hits a bottom, then you're going to have opportunities galore to jump in, but you have to have cash, right? So that's why you kind of need to structure yourself as best as you can to have some of that cash available when you hit bottom, because the bargains will be unbelievable then. And that's because nobody, when you hit a bottom, normally it's kind of like, you know, remember the 2008 crash when you had like Bank of America at $2? Nobody really were jumping in to buy it, okay? But that was the buy, tremendous buy at that time. So when things bottom, same thing with real estate, you know, it bottomed and then it took off. So bottoms create tremendous opportunity. So try to be optimistic as you can and structure yourself to take advantage of that if you can. Now everybody's situation is different, I get it, but you know, try to protect your cash as much as you can, okay? That's the key. And yeah, you can go into gold, you can go into all these types of things, but the idea is you kind of want to try to not lose what you got, okay? That's the main thing. All right, so that's kind of that. So here's the Dow, you can see it coming down a little more. Now what's interesting here is that we have created a new red PTF. We haven't seen that for quite some time, way back here. It wasn't the straightest of lines, but something like that, okay? You haven't seen that in quite some time. So that's kind of interesting. So what that tells us when it's red like this on the daily time frame is that if we bottom here and that remains red and we pull up, then that means there's a 75% probability we're going to be taking out that low, right? So that's a big deal, okay? Let me just pop up the data box here, move it over here so you can see it. So we are at what, 32,878. So we want it to get down a little further and start taking out a few more lows like this one here, okay? And then this one down here. All right, that's the next big one right here. Okay, so keep an eye on that. Now we have a red PTF like I showed you before in the COVID low, which as you can see, you know, this is just classic. You know, you've got this situation here where you could be unwinding. All right, what's important here is we have not taken out the high, okay? And that's, you know, that's important. If it had been a returning bull market, I think we would have taken that out by now. So this is setting itself up for a bear market, big sell-off, okay? So there's a lot of white down here, okay, for it to fill. So that's where we think it's heading, okay? All right, so we got still bearishness coming down here. We've got all the pyramids on the short term. We got pyramids down here. We'll see if we have, so far we have bullish divergence, but it may not be done coming down yet. So we'll kind of keep an eye on that. Market's up a little bit right now. It was down this morning, so it's turned around a little bit. You can see it a little bit on this, on some of this here, but not much. Don't get me wrong, it's not exactly terrific. But anyway, we'll keep an eye on it. So it probably is due for some type of move back to the upside, but maybe a little bit further down. Doesn't look, you know, that's pretty steep, deep owl. So that's usually an indication of more. We've got owls on the 1 minute still pretty prominent to the downside. Let me open that up, see? So that's pretty prominent, and I don't see a turnaround of momentum there, and I don't see much of one here. And this, we'll see what happens. If this goes red, all right, then we want to pay attention to that because that may be getting ready for the next leg down. So red here, green here, and let's see if this goes red again. So we'll keep an eye on things. So we'll keep an eye on it. All right, let's take a look at the NASDAQ real quick. All right, so NASDAQ, same type of thing. We have not taken out the high here. All right, same type of thing. We do have a green PTF here, so I'm more bullish on the NASDAQ market than I am on the overall market, represented by the Dow. All right, S&P will be the same pretty much as the Dow. So I think maybe another high on the NASDAQ, and we'll see, unless that PTF turns red on the daily chart. So here, let's draw this in here. Give me 1 second. Let's do a little fib correction here to here. See, we're getting down to that target now. And also too, if you know, A wave is this distance, so C wave's got to be at least that distance. Sometimes it's 1.618, so it could go down into here. So I think a little further down on both the NASDAQ and the Dow before this move is over, okay? And then I expect a rally, so we'll see what happens with that. NASDAQ, I think, is going to have a more significant rally. I think it's going to take out that high on the daily at some point. We will see. I do not think it'll go above the high on the weekly chart, though. So I'm thinking one more high like that, and then boom. All right, so that's kind of that. S&P, similar to the Dow on pretty much all aspects. Okay, all right, let's take a look at cryptos. Let's go over to GBTC, which is the ETF for Bitcoin. All right, so we're bullish on this, and doesn't mean it might not pull back a little bit before it goes. This price bar I found very disturbing right here. This was one when I first saw it, I thought it was a misprint or an error in the data reporting, but no. So James, you must have gone into the market that day and messed with it. I'm not sure. But in any case, I put your stop under here if you can afford to do that. That's 50% away. So maybe here. There's no options on this. Okay, so that's the problem with this one. But I do think there's a bottom in on this, significant bomb. Yeah, James, I thought that was you. All right, so anyway, that's one opportunity for you. I would not bet the farm on this stuff, okay? But I do think it's not a bad place if you take some money out of the market to put them in some form of the cryptos. Now, my feeling on the cryptos overall, there's a lot of back and forth, back and forth, back and forth on this. You know, it's a hidden market. I kind of think anything on the internet is not hidden, okay, for the most part. You always leave a footprint of some sort on the internet, okay? The thing is that the cryptos are a currency that will be in play, I think, in the future, whether you like it or not, for transactional use and, you know, I guess to some degree investment at some point. But you know, we'll see how it unravels, but it kind of reminds me of the .coms back when they first came out, okay? People were weary of those. They had their big bubble up like the cryptos had here, okay? Then they settled down like they did after the year 2000 .com bubble bust, and then out of the ashes rose the internet as we know it now, and all the .coms that we basically think of as standard ways of doing online business, right? So I think that's what we're going to see in the cryptos as well. I don't think they're going away. I think they're here to stay. But I think it's an evolution, okay? Now, not a revolution, an evolution. All right, let's take a look at coin. All right, this is Coinbase. This one too, I actually like here, but you see it's had a pullback. But you know, these type of movements, when you have a big move up, there's profit taking and pulling back. So no problem with that. I would not go into this one yet. If you're on the sidelines on these, take a look at all 3 time frames. So we're still seeing red here on the 60, red here. So it's still coming down. So, you know, wait until this move down comes to an end, and you'll see that by the chart on the far left having no more red down here, and this chart having a green here, and some bullish change in price structure. You don't have that yet. And then we have RIOT Blockchain Mining Company, the same. So they're all pulling back. The key to all these Bitcoins and cryptos and things, let's see if this bottom holds. find the bottom of every crypto you're looking at. And the idea is that you got to make sure that bottom holds. If it doesn't, that's not a good sign, obviously. Then all this movement to the upside since that bottom has been nothing more than a brief corrective rally instead of a new trend to the upside. All right, so keep an eye on that. That's why I'm saying, when we try to catch bottoms like this and get off, it looks good for a big move up, but you don't bet the farm, okay? You bet what you can afford in case you're wrong, okay? And cryptos are no different. All right, let's take a look quickly at the real estate, some of the ETFs. This one is CPT, and boy, has it been banging to the downside. Look at that, okay? I find interesting is this. Check this out. This PTF is almost going red. If it does, that's really bad, okay? So that basically shows that things have changed dramatically. All right, so we've got a big move down. So we had this big move down, an upside. We sold our house right around in July here, so we kind of got lucky that way. And since then, it has sold way off, okay? So there you have it. And it's still coming down. Now, will you get a rally off this? Sure you will. You always get, markets always go in cycles. You get little rallies. But I think what happened here is that, we're going to see what happens, is that this is still going down. Let's see how much further it will go. This is starting to see a little bearish divergence inside this move. So even if we get a pull up here, and we may, this is still very low. So we'll keep an eye on that. Let me just say, so that's residential. Let me take a look at this one. This is the MAAA, which represents Mid-American Apartment Communities. All right, so that's another one. Again, almost a duplicate of what we just looked at. Okay. Higher interest rates obviously have made it very difficult for investors to have the same type of spread they need to make money, obviously. All right, carrying costs increase so that's why nobody's really buying at this point. You're not going to refinance. So we'll see what happens with that. All right, S-Dow, sure, let's take a look at the old S-Dow. We've looked at this one many times, okay? So this is an inverse of the Dow, so this is starting to move on up, okay? So this is starting to look really good. We'll start adding this one too, I think, probably in the more report now. It's kind of waiting for it to break this little level here, okay? But it's looking pretty good. All right, so I'm thinking pretty good things on that. All right, let's see what else. All right, if you want me to look at any more, type in all caps, right? All right, Frank is saying credit cards now charge 29. Are they up to 29%? Oh my God! Might as well just get it from the mafia. Okay, let's see what else we got here. Is that Kruger Grocery, KR? Is that the symbol on that one, Lowell? Can't remember. I think it's Kruger and Company, right? All right, let's take a look at this one here. I'm going to open up the weekly chart. Okay, so normally, when you have a high like this, you kind of think this is a wave 4, right? Makes sense. But then when it continues and you have an owl that's higher than this and incredibly steep, as soon as that owl and the price structure shows an impulsive wave, you know that's a 3. So this is a 1. This is probably a 2 under here maybe, and that's where you are now. Okay, so you probably are going to get a little bit of a correction here. And I'm just going to draw that in, I think from here to here. So you're in the target range now, but you do have now a red owl again, so you're kind of still feeling your way down there. This is red, but no longer red. It just turned yellow. That's a good sign. All right, and this is yellow here. So all that's a good sign. The owl, the momentum's coming up. You can see it on the 60-minute chart. This was from a while ago. Let me get rid of that. Not to confuse you. All right, so you're starting to move up there. You're starting to move up there. All right, so, you know, do we have a bottom in? Don't know quite yet. It's a little too soon to say because I still see some red up there. But this one should go on a watch list because when this correction is done, you probably want to go long on this. All right. Okay. By using the multiple time frames, that's a good way of going. All right, good. So, what do we got? Yes, welcome, Dan. How are you? Jean, don't forget to subscribe to the YouTube channel. All right, and she gave you the link, and be sure to join us every Friday at 8 a.m. Pacific time for Stock Analysis Fridays. Yeah, that's kind of a lot of fun. Okay, Stock Analysis Friday is a good time. We're there for about an hour. We can usually find a handful. Now, when we can't find many, let's say we only find one, like we did last week, we know the market is not that bullish. But when we look at things and we can find some that are good, that's good. Now that we're in more of a selling market, it'll be interesting to see what shorts we can find on Friday. So definitely try to make that if you can. And we also have the recording that goes up, and I think Gene sends out the recording. So if you can't make it live, you can see what we found by going there. We'd love that. The more people we get there, the better, though, because they bring more stocks. All right, well, let me end here. Okay, it's 9:08, so I went over a little bit, but good time today. And don't forget, client support starts very soon, and it's wonderful to see everybody there. Hope everybody's doing fine as we work our way into April. And remember, even though the market's selling off, there's opportunity for us. Okay, don't forget that as traders. All right, have a good one, and we'll see you next time. Bye-bye.